the reality on the ground is that there are steady improvements taking place in corporate governance in Japan. There are more independent directors on the board of Japanese companies now than ever before. Some large household names have a majority of external directors on the board. Sony has a majority of external directors. Hitachi has a majority of external directors. Names that perhaps a few years ago people would not have thought would take that route with governance. We're seeing dividend payout ratios increase over time. It's not unusual now. In fact, it's commonplace now for companies to target a 30 or 35% payout ratio. Including buybacks, there are many companies that have a 50 or 60% payout ratio of their net profit. There are obviously exceptions. There are sort of stick-in-the-mud companies who don't want to go that way. Canon, for example, has no external directors on its board. Toyota has no external directors on its board. Both arguably hoard way too much cash on the balance sheet and should be buying back stock. Toyota trades below book value. I think it should be buying back stock. It has 60% of its market cap in net cash. I don't think it needs to have as much cash on its balance sheet as it does. I think it should be more responsive to its share price than it is. But I think around it, there are more and more companies that are beginning to improve their governance and are starting to show more awareness and respect for minority owners of their companies. So I don't think governance in Japan is going backwards by any means. I think it's going forwards. But I think it's a slow process, and I think it's often masked by the sort of general macro environment in which Japan finds itself. Japan is a mature economy that has a large vested interest in global growth. Japan is very tied into growth in China, to growth in the US, to growth in Europe. It suffered a major appreciation of its exchange rate in the last 5 years that has severely impacted the earnings of many exporting businesses. There's no doubt about that. And I think that those troubles have masked some of the improvements going on behind the scenes in corporate governance. But there are companies out there paying back 60% of their net profit in cash to shareholders that have a genuine appreciation of their cost of capital, that engage minority investors on a regular basis, and are very respectful of the owners of their companies. So I don't think it's a country where governance is in the bottom quartile of the global average. I think that's wrong. I really do think that's a misperception.